Hi, my name is Mike Helton, and I'm a tax shareholder here at Rivero, Gordimer Company.
I'm Chris Terrigino, and I'm an audit shareholder at Rivero, Gordimer Company.
So if you're watching this, you may be a subscriber to our YouTube channel, Beyond the Bottom Line. This is the next publication. If lucky and we're doing things the right way, you might be watching this through our Facebook, Twitter, or LinkedIn connections as well. Chris, today, as a tax shareholder, came across some information on our website. You wrote an article back in July, I think, of last year about new lease standards. And as a tax person, I was sort of caught off guard, like, okay, what is this and who's it apply to? I know we ended up this past busy season dealing with that on some matters with some clients. But as an uneducated tax person, I'm trying to figure out what other clients this might apply to. So tell me a little bit about what drew you to want to write the article and where I found it on our website. If you go to our website, we've got a section there for articles. If you drill in to business advice and just do a search for lease, you can find this article, and it pulls up and it looks like a rent-to-own contract. So does it just apply to RTO businesses in general, or is this open to many others?
Okay, Mike, this will apply to basically all organizations that lease property. This change came about a few years ago, and now it is in force as of the beginning of 2022 for all companies, where they basically need to look at their leases and capitalize or put them on the balance sheet as a right-to-use asset and a liability, basically a lease liability.
Okay, so I've got to ask some questions, because now you're talking above my head. So you said right of use. So if I lease, so let's just say I'm a great local bakery, La Segunda. It was awesome, best Cuban sandwiches in town, by the way. But let's say I'm La Segunda. I don't do GAAP financials. I don't do an audit. I just hire Rivero, Gordimer Company. I keep a set of QuickBooks. Do I need to worry about this kind of stuff?
Not at all. If you are not producing GAAP financial statements, you most likely don't need to worry about it. But keep in mind, your bank might want to see GAAP-style financial statements when you look at your loan covenants. So always check that out, and you might be able to get a waiver from the bank on that, because honestly, they might not care about it either.
Okay, so if I'm not hiring us to do a review or an audited financial, but I still want to keep GAAP level financial statements, this is still something that I need to be inquiring about.
Yes, it's something to check into. It's not hard after initial implementation of it, and just updating it is basically amortizing it away like you would any other fixed asset.
Okay, so you mentioned right of use assets. So this is going to be a new asset and a new liability on my balance sheet.
Yes, absolutely. You're going to have a new line items for a right to use asset, and you actually will split that if you have operating or financing leases, which is just two different variations of a lease that don't matter much right now, Mike, but it's just the thought that you're going to see a separate line item, you're going to see a separate liability, a new asset.
Does it impact my bottom line at all?
It will change the bottom line a little bit, but not a true change. The cash is king. The cash out the door is not changing because of a new accounting standard. It's just going to be the way it's presented between rent expense and either interest or amortization expense. Before you paid rent, you wrote rent expense and you were done. There's going to be a slight change there, which could affect some of the, again, we come back to the debt covenants, the way you look at your EBITDA, things like that. But overall, the cash number isn't going to shift because of this.
You say EBITDA, I say EBITDA. Okay, so if I haven't done this yet, can I do some kind of a catch-up AJE, journal entry?
Yes.
Whatever.
Yeah. One thing they did is you don't need to go back to the beginning of time. You can basically incorporate it as of the beginning of the year and just catch up with all your leases and bring it to that date and go forward. Otherwise, it could be overly cumbersome to go and keep looking back. So.
Okay, so if I've looked at this video, I've spent 2 minutes, and I say, oh, this might apply to me, who can I call? Obviously, I want to go back and read the article, but who can I call at our firm to get more information? Is there someone you
can call me. You can call any one of our auditors here. We have to be prepared to deal with this. This is in effect this year now. So we're talking to our clients and even potential clients that, are you aware of this? Are you incorporating the changes now? It's very easy for one or two leases, obviously. When you get to much larger companies with multiple leases, 100, 200 leases, store leases, or other types, vehicle leases, things like that. You're going to need to analyze each one of those, and you might want to look at buying specific software.
So this applies to vehicle leases too,
Yes, it
not
does.
just land leases or
Yes.
operational store retail
Yes,
leases.
it applies to all leases, but I want to talk about some exceptions real quick, Mike.
Okay.
One, if a lease is less than 12 months, you do not need to apply the standards.
Okay.
Okay. If it's below your standard capitalization policy, like normally you expense items that are under $5,000, you could apply the same standard here. The lease cost total wouldn't be over $5,000. You could expense that as normal. And the last one area generally deals with related parties. There could be exceptions there also because basically a lease is a conveyance of a right. When you own both sides of it, it's not really, you're not giving up anything. So
All right, so my operating store leases to my LLC that I own as well. Mm-hmm. There's exceptions there.
You could have an exception there if you want.
Okay. All right. So is there any more information we're going to put out on this, like a webinar or anything of that nature, more detailed?
Yeah, we are looking, like Mike mentioned, we have this nice article. It's a good primer. We're going to put together a detailed transactional application of this, looking at a lease and what are the actual entries that need to be made on your books to be posted to your general ledger, which will in turn end up on your financial statements.
Are we going to hand out Red Bull to everybody that attends that webinar?
It's going to be exciting, and we're gonna focus on the standard, normal store type leases. Generally, that's what the majority of people are going to have.
Yeah.
The facility they use, that's the lease. We don't want to overcomplicate it because, like with everything, there's always a multitude of exceptions or other types of contracts that come into play. Those, if you need help with those, especially, we're here to help you. But for the most part, we want to make it very simple for people to do it themselves because you'll be better off understanding it yourselves.
Great. Good information, Chris. Thank you for your time.
Thank you, Mike.
And thank you for following us on Beyond the Bottom Line. Have a good day.